Welcome back. If you look at the markets, it's a 472-point downtick that we've seen. The Nifty just below that 24,400 mark, not looking particularly good. And that's exactly how the FNOQs are shaping up as well. The West Asia concerns have had the Nifty and the Nifty Bank under pressure, but the only thing that is supporting the frontline index is not a big enough fall.
Now slipped to 24,380. So every single recovery or very little recovery that is taking place intraday is getting sold into with equal ferocity. Ajit Mishra from Religare Broking now joins in for a quick chart check. Ajit, good morning. Thank you for joining in. Now we've had that 500-point gap down. Do you want to be brave and take a contra call here, considering the fact that we've declined almost 1,000 points now in just the last 2 or 3 sessions? Your call on the index and specific stock recommendations as well.
Yeah, good morning, Ormaz. So, Ormaz, yes, the decline has been serious, and we are still not seeing any sign of respite. Though after the initial downtick, we were seeing that index was trying to hold or inch towards 24,400 plus zone. But Ormaz, the last support zone of the February month low, close to 24,570, 580. Its break has definitely dented the sentiment, because in the last trading session we could defend that levels, and in fact in the last hour of the trade we recovered very strongly. So today's close is going to be very important. So in case if we fail to let's say reclaim this 24,600 mark, I doubt that we're going to see any meaningful recovery. So instead of trying to catch the falling knives, it's prudent to hedge your long positions through index puts or through shorting your positions in the sectors or stocks which are looking weak. So basis that, Coal India definitely is among the top name wherein we are seeing strength. So that can be considered as a buying opportunity when it comes to the stock specific positioning, with 455 as a target zone, with stop at 425. At the same time, Trent, which is continuously, inching lower with every passing day, still there is no sign of recovery. Here one can go short even at current levels with 3610 as a stop loss and 3610 as a target and 3820 as a stop loss.
Right. Individual stocks, what would you say? I mean, would you play still on the short side, or would you fancy some of the longs at lower levels?
So, Mangalam, mixed means, till last trading session, we were seeing that sectors like banking, auto, metal, energy, selectively, pharma, they were all holding strong. But today we are seeing that this carnage is across the board. So, barring IT, like you have rightly mentioned, other sectors, they are again, they have started participating on the downside. So maybe those who are sitting on the positive side or making positions, profitable positions, they are trying to liquidate. So because of that, we might continue to see pressure in the other sectors also. So for a time being now, the prudent approach is to avoid any aggressive positioning across sectors, barring a couple of names that we have mentioned.
All right, we take that break. Thanks a lot for joining in. Ajit, those are the important levels and some of the stocks that we need to track. But barring the charts, fundamentals as well, something that we'll discuss with Mukul Kochar, who's the head equities from Investec Capital, joining in on the other side. Should we take some fundamental calls in the time of uncertainty? Will they provide them some good, attractive entry opportunities, or should we stay away? All those questions to Mukul.